Welcome, dear traders. You are watching a recap of the Asian session on August 23. The cautious sentiment continues to dominate in the stock market indexes. The annual Jackson Hole Symposium will start tomorrow. Meanwhile, markets await data on a purchasing managers indexes in Asia, Europe and the United States. In the Asia-Pacific region, the PMI reports have already been published. The four stock indicators in Japan and antipodian countries went up early Wednesday. At the same time, stocks in New Zealand rose slightly. India's Nifty 50, one of the leaders among the emerging markets, failed to withstand fears of a high US interest rates and sluggish China's recovery and started to decrease. The outlook for interest rates of the United States and other top global regulators will be discussed at the summit in Jackson Hole. Representatives of the central banks will hold the annual symposium between August 24 and 26. The speech of the head of the US Federal Reserve is scheduled for Friday. Jerome Powell's statements will be analyzed very closely for clues about the outlook for interest rates. Will the Fed chief provide clarity on how long the regulator intends to remain hawkish? Most likely no specific timelines will be set. Such statements require complete clarity of inflation and the labor market. These indicators in the United States are not performing as predicted and may bring surprises. The news about U.S. Secretary of Commerce Gina Raimondo's upcoming visit to Beijing was welcomed in the Asia-Pacific region. According to the media, the visit is scheduled for the next week. Markets were also optimistic about the prospects of removing 27 Chinese companies from the U.S. blacklist. The move may lift sanctions and also raise hopes for improved diplomatic relations between the world's two largest economies. The Asia-Pacific region and the Chinese economy in particular will benefit from this. Meanwhile, the Japanese economy is slowing down amid a deepening crisis in the country's real estate sector. The downturn in the leading market is also hampering the development of other countries in the region, reducing demand for commodities and oil on world exchanges. While central banks chiefs will discuss the possibility of reducing inflation without the threat of a recession and a labor market decline in a Jackson Hole, China is still hesitant to take measures to save its real estate sector. On the contrary, the country's central bank has decided to cut lending rates while Country Garden, once China's largest real estate developer, is on the brink of a default. The new lending rate actually the cost of a new construction and the income of the developers. Nevertheless, China's leader Xi Jinping assured that economic activity in China remained stable and long-term economic fundamentals were unchanged. At the same time, the country's currency is depreciating sharply. The Chinese banks are trying to boost the yuan. They have been pouring US dollars into the markets for more than a week. It seems that the peak of pessimism about China has yet to be reached. In addition, the United States, Japan and Australia will conduct naval drills near Philippine shores this week. China may react negatively to this event. While the yuan is struggling to stabilize, the US dollar is soaring. Sometimes the US currency's growth may turn into a sharp rally, as seen on the chart. In recent weeks, the greenback received support not only from the US statistics, but also from seasonal and technical factors. August will offer reports on global economic activity, real estate problems in China, and speeches of policymakers in Jackson Hole. Judging by the movement of the US dollar against the basket of its G6 counterparts, the changes could be very dramatic. The greenback has been consolidating and smoothly declining within a narrow range of 103.10 and 103.60. After that, it spiked to its 2-month high near 103.80 at the end of the Asian session. A rise in the US Treasury yields and bets on a hawkish Fed outlook have been supporting the US currency for some time. In addition, hawkish comments from a Richmond Fed President Thomas Barkin, who spoke a few hours ago, also helped the US dollar. As a rule, these factors weakened the Japanese yen. However, this time the yen did not decline. On the contrary, it began to strengthen yesterday in the afternoon. And today the dollar-yen pair is trading within the range of 145.20 and 145.90, showing an even deeper decline in the red zone. As a result, Wednesday's Asian session brought the yen to the area of 145.3. However, the ongoing disagreement between the Bank of Japan and the United States Federal Reserve is hampering any significant yen appreciation. Although the pair continues its bearish momentum for the second day in a row, its price is still in the zone of a possible intervention. In addition, the US economic data have not been released yet. In Japan, the PMIs have already been published, influencing the pair's trajectory. Industrial production in the world's third largest economy fell for the third month in a row. According to reports, however, there was an acceleration in business and services in the late summer. As a result, the PMI composite also rose to 52.6%, and this data helped to bolster the yen's safe haven status. However, yen bears may face an unpleasant surprise. Increased optimism about signs of easing trade tensions between the United States and China may help to limit further yen gains in the region. The charts of the antipoding currencies look like twins today. For Australia and New Zealand, sentiment in China, expectations for the Jackson Hole statements, commodity and oil prices, and domestic data influenced the currencies evenly today. These factors are unfavorable for the Aussie and Kiwi. The Australian dollar experienced several ups and downs early Wednesday in a range of 0.6416 and 0.6453, closing the Asian session in the red at 0.6422. And today the New Zealand dollar also traded between resistance at 0.5968 and support at 0.5933. As a result, it closed Wednesday's Asian session on a dip near 0.5940. So that's all for now. Leave your comments down below and don't miss our next video review. See you!